Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, you know that this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. And as today is Friday, we will also get you Buy Now, Sell Now Pathshala. But before that, let's have a look at what the markets are up to. So Cheryl, seems like before the long weekend, markets are in a weekend mode and mild profit booking for the bank nifty at least.
Absolutely, Shrishti. A very good morning to you. And to be very honest, I completely forgot about the long weekend. So one more reason to cheer up this Friday, apart from the fact that we have begun a brand new series as well. And we have begun the brand new series on a very, very flat footing. Flat as flat can be, but with the positive bias for the benchmark indices. Nifty Bank is the one that's trailing in today's trading session. 0.3% downtick coming in for the Nifty Bank. If you look at the advance decline ratio for the markets right now, it's very much tilted in the favor of the advances. So yeah, we may see some pickup in steam as we go ahead for the markets. Talking about the list of gainers, then you have Adani Enterprises, Wipro, Adani Ports, HDFC Life, as well as L&T that are ruling the charts. Remember that Wipro came out with its numbers. It was a tad bit of a disappointment, but the street is actually shrugging it off. And as you can see, the stock is trading higher by about 2.8%. But on the flip side, Axis Bank, this one also came out with the numbers yesterday post-market. Our street is definitely not happy with this one. Right now, at the day's lowest, 0.3% downtick, approximately 3% downtick coming in for Axis Bank. Bajaj Finserv, HUL, Titan, as well as HCL Tech are the other set of losers in today's trading session. Let me put the focus then on the sectoral indices. And talking about the sectoral indices, you have consumer durables that is under pressure, but PSU Bank Index continues to rule the charts. Top gainer with gains of about 1.2% as we speak. So that's the way how the markets are looking like in today's trading session. But Shrishti, like you mentioned, it is Friday and it's day for Pathshala as well.
Well, yes, absolutely. And into the studios live, we have Kunal Bhutra. So let's get across to him and find out what interesting topic is he got for our viewers today.
Thank you so much, Shrishti, as well as Cheryl. So today's topic is on bullish engulfing. It's a candlestick pattern for many of these stocks as well as for the asset class, but it's on the bullish side where we expect that how the asset class or a stock goes into a bit of a turnaround mode. Now, the first chart, which is more of an example chart of how the bullish engulfing pattern and what's the chart looks like. So this is a simple downtrend for the for a particular stock. When the stock is going down, it forms a red candle for itself, and suddenly, all of a sudden, there is a strong green candle which emerges to counter itself in terms of the trend. Now, this green candle manages to engulf the bearishness of the previous entire candle. This itself is what we call as a bullish engulfing. Now, what does this mean? This means that the buying power oversees the selling force for that particular stock or that particular chart, and then the trend reverses for the stock price. And we see post that after a bullish engulfing pattern, the stock actually goes into an upward trend. Now, we'll see two examples over here. The first one is what we've covered is Bajaj Finance. So as you can see over the last many months, this is a monthly chart for Bajaj Finance. Look at this power of this bullish engulfing pattern. So 3 successive months of downtrend for the stock in the year 2022. And all of a sudden, you saw a very strong bullish engulfing pattern. The stock, crossing about this, major previous high, and then beyond that, it managed to go into a multi-month rally, at least a 2 or 3 months of rally, and this was almost a 20% uptick for Bajaj Finance. What we are seeing right now is that the stock is also now on the verge of forming a similar bullish engulfing pattern. So hopefully, the stock crosses about this, today's, current level as of now. We can expect this monthly engulfing pattern to try and complete for Bajaj Finance as well. So this could probably indicate that for the next 2 or 3 months, the stock can get into a further uptrend. We'll see one more example over here. Much more cleaner example is on the charts of Titan. Again, on the monthly charts where the stock was going into a downward trend, 4 successive candles of the stock going into a downtrend, making new lows on successive months, and all of a sudden you saw the stock forming a bullish engulfing pattern. And post this pattern, you saw the stock not just rising back above the previous swing highs, but even crossing about those levels. So that's the power and that's the force of how a bullish engulfing pattern and the importance of this pattern to identify strong reversal zones.
All right, that's something new that we've all learned in today's edition of Pathshala. Shala, but let me bring on board as well as Sneha Podar, who's joining us on the show from Motilal Oswal Financial Services Limited. A very good morning to you, Sneha. Thank you so much for joining us on ET Now. And we've learned the technical analysis. We've got a Pathshala coming in from Kunal. But for retail investors, what should they keep in mind while making sure that their wealth is protected? What sort of a strategy should they all adopt?
Hi, good morning. Basically for retail investors, the strategy should be, if you're a long-term investor, then definitely they should buy on this dip. So whatever the portfolio they have, they should review it, and accordingly they should take their bets. But if you are a trader, then it's a result season, so a lot of stock-specific ideas are there. So one should navigate this result season with a stock-specific view, but they should be cautiously taking the bets, because the market has been volatile on the back of the volatile global cues. So it's like the domestic biasness is positive, but then because of the global factors, a lot of volatility is seen in the market. So traders definitely they should have a positive. They should bet on the market with positive view, but then with some sort of cautiousness. What I mean is they should not go overboard. So yeah, but then definitely it's a buy on dip market.
Okay, this is a buy on dip market and what strategy you should follow. We got an advice. Thank you so much for joining us today on ET Now and helping with what should retail investors do at this point in time. But with this, it's time to slip into a short break with... Welcome back. You're watching Buy Now, Sell Now on ET Now, and moving forward, and let's connect with our management. We want to be focusing on Wellspun India. The company has come up with its numbers, and this time around, it has been an upbeat performance with an impressive guidance going ahead, where the company expects the margins to be 15% going ahead from the current levels of 13%. So let's understand what is giving the confidence on the margin expansion and the sales growth, and what are the factors will be at play as per the management. Onto the show, we are being joined by Dipali Goenka, CEO and Joint MD at Wellspun India. Hi, very good morning, Dipali, and thank you so much for joining us today on ET Now. Firstly, you have given quite a strong guidance for FY24. Tell us, what is the on-ground situation? What factors do you believe will be at play for FY24? And along with that, we're also getting comments from the retailers suggesting that we are at the fag end of the inventory destocking cycle. Some green shoots for demand finally emerging for you. How do you see this situation?
So, first of all, let me just give you a perspective, and I'll just put in as a trend as cautiously optimistic. And definitely there are reasons for this, because there's destocking that has happened. We are at the fag end of destocking of the inventories at the retailers' end, because they were holding some, kind of high-priced inventory as well. And this will actually might continue till Q1. But yes, the trend has begun. As you see, the cautiously optimistic next year for us, definitely when we talk about the core business globally, our freight costs have come down dramatically, like over 80%. Our cotton prices, which actually are now at 60, we are looking at around a 60,000 to a 65,000 cotton per candy. So that is where that is also going to have an impact. Now, when I look at Wellspun India, I must tell you that our basket not only looks at the core business, it also looks at the emerging businesses, which actually contributed 34% of my top line this quarter, and which will continue to grow at the same rate and will be at 45% at 2026. So overarchingly, the business is looking cautiously optimistic, but the domestic business, our emerging businesses, will continue to grow aggressively as well.
Right. A very good morning to you, Ms. Goenka. This is Cheryl also joining in the conversation. And let me actually put the spotlight, move away from your numbers actually, and talk about what's been happening with Bed Bath and Beyond. We all know that they've recently filed for bankruptcy. Could you highlight your exposure to this account, and also what are the provisions that you have in place? Any concerns that even investors should have in this?
So for us, and I think I'll maintain, and I've spoken about it in the last interview as well for Bed Bath & Beyond, and I think I will not talk about any retailer here, but Wellspun is truly covered, and our business interests have reduced with most of these kind of retailers. We are completely risk covered. for even if these kind of issues come in, in the terms of credits and the others as well, so that there's complete true sense of governance that we, work towards. And yes, so we are completely thoroughly, sure about our and your concerns, if there are any here.
All right, that I'm sure will allay all concerns or any concerns if in the mind of your shareholders. But do you believe that there's some bit of indecisiveness with regards to orders due to the macro volatility that we are witnessing in the United States as well as Europe? Would you say the demand has begun to bottom out? And also, if you believe so, then by when do you expect to return to a normalized demand level?
As I maintain, we are cautiously optimistic. America is a resilient economy, which contributes around 34% of the home textiles, demand and consumption. So we have seen that it has defied, the perspective on, we have had retail sale of around 2.8% this year, which has actually been actually very, very positive. UK, Europe are continuing to be a little bit on kind of a downside. But I will definitely say that Wellspun continues to be cautiously optimistic, but this will also be owing to the destocking of the inventories that we've seen, and also because of the commodity prices coming down relatively. We know that, the recession is looming around. Those are kind of things that we have continuing to talk about. But however, Wellspun is geared up in the terms of what the demands are looking like. And we maintain that, we will maintain a growth of around 10 to 12% this year, and 15% EBITDA for Wellspun India.
Okay, but Dipali, since you have a target to be net debt free by FY25, so how are you looking at, how confident are you to achieve this particular target? And along with that, as per you, which segment will support you the best in a manner to get net debt free by the next 2 years?
So let me give you our complete perspective here as well. Last quarter, we were over 2,000, in our debt. Today, we are around 1,500. And our core business in a couple of quarters will be absolutely net zero. It is about our new investments that we've done in flooring and advanced textile. We maintain that, next year we'll be below 1,000 crores in our net debt. And going forward by 2026, we'll be net zero as well. And if you're talking about the businesses, again, I'll maintain core business is one aspect to it, but our emerging businesses are continuing to grow and continuing to grow stronger. And that's going to contribute. And domestic business, look at the domestic business, and India being the North Star in the kind of consumption as an economy. Our business grew 30%. We maintain that. We have been EBITDA, absolutely EBITDA zero here. I mean, we have actually, we are looking at we are going to be, growing that at 30% next year as well. Looking at even our working capital, we have been cautiously taking a prudence on our working capital exposure in retail in the terms of, lower inventories, turnaround times, inventory turns, as well as debtors as well. So definitely that's also going to pay as we go forward.
Apart from announcing stellar set of quarterly results and also giving a very healthy guidance, your company also announced a buyback of up to 195 crore rupees. Could you tell us what's the rationale behind this, and also would promoters be participating in this buyback?
So promoters have always participated in this, and I will tell you, this has been a trend with us for for the past 5 years. 30% of the free cash flow goes into this every end of every year, and this has been the way that we have distributed annually end of the year, and this has been something that we maintain as kind of a tradition or a culture.
Okay, with this, Dipali, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the outlook for Wellspun India, and wish you all the best for the upcoming quarters.
Thank you.
So that was the management of Wellspun India. We're going ahead. They believe that the domestic business should support the sales growth for the company. And not just that, if we look at their guidance going ahead, so they have given a guidance to be net debt free by FY25. And they believe that their domestic business, or rather their, in couple of quarters, their core business is expected to be net debt zero. But with this, viewers, let's start taking all your stock related queries onto the show. We will be live on Twitter. You can also connect with us on our WhatsApp number flashing right on your screen. And moving on, the first question that I have, Kunal, is coming from Subrata Mukherjee. He wants your take on an IT counter that is Emphasis. He is looking for a fresh investment in this particular counter since IT counters are holding up well in today's trading session. What's your outlook?
Yeah, good strategy to buy or accumulate at current levels. The stock has already corrected 50% from the previous highs. 3,500 approximately was the high. The stock made a low of, I think, 1680, 1660 somewhere. So I think at current levels of 1800, it's a good discounted price for the stock. Looking at the long-term trends, it could be a very attractive risk reward. And my sense is that these IT stocks are now getting into the heat of so much of negative news flow that it warrants some sort of a contra buying. So you can start buying on dips at current levels for most of these IT names, including Emphasis.
All right, so that's the take coming in on Emphasis, but we'll just hit the pause button for the queries and take a break on this edition of Buy Now Sell Now. When we come back, we will be joined by another management and we will be taking your queries. So viewers, don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries by our experts. But today we have a lot of managements on the back of their earnings joining us. In short while from now, we will be joined by another management from the IT space. But before that, let's have a look at what the markets are up to. So nothing much happened in the past half an hour or so. Nifty holding above that 17,900 mark. We are still awaiting that 18,000 mark to touch by. But before the long weekend, doesn't seem that the momentum is that strong. But for the bank Nifty, trading in the red with the cuts of minor 125 points of losses. The breadth of the market is really supportive today. On NSE, if you will say, then 1,440 stocks are seen to be advancing versus the decline of 575 stocks. So clearly, the breadth of the market is in the favor of the bulls. But let's see where the markets are headed from the next turn, as this is the brand new series. But let's move on and connect with LTI Mindtree, because this time around the company has actually missed their guidance and the results were not that impressive, but nevertheless the stock is holding up itself in green. So let's understand what is the business outlook. We are being joined by Debashish Chatterjee, CEO and MD at LTI Mindtree. Hi, very good morning, Debashish, and thank you so much for joining us today on ET Now. Firstly, the growth rate moderated quite a bit in Q4. Was there a one-off, that specific ramp down, etc., any of the factors playing in over there?
First of all, thank you for having me on your channel. As we have indicated in our commentary yesterday, the primary reason why we did see a little slower growth in this quarter is many of the deals which we expected to ramp up, the ramp up has been a little slow. I think there has been a delayed start. That is on the back of cautious decision making in many of the client scenarios, especially in BFSI. We have seen, especially in BFS, we have seen a few clients getting into a hiring freeze. So those are primarily the reasons why we did not see the ramp up that we expected earlier. But we are at the same time, our pipeline is very strong. We are in the final stages of closing quite a few the large opportunities. So we are very optimistic about the future as we go along.
Right. Good morning, Mr. Chatterjee. This is Cheryl also joining in the conversation. And if you look at the overall FY23 growth was about 20%. If you could tell us what sort of a growth outlook do you have for the current financial year that we are in, that is FY24?
Well, at this point of time, as we said, even if I look at many of the large deals that we have closed, and we are in the process of closing, it has kind of shifted from transformation to cost takeout or efficiency play. And given that scenario, there will be a significant amount of transition that will happen in Q1, and which also means that we will have a slow start to the year as far as Q1 is concerned. But seeing the pipeline that we have, the deal activity that we have, we even have a very strong order book as well. So all these things give us the confidence that in spite of a slow start in the next year, we will be definitely getting into a double-digit, growth as far as FY24 is concerned.
Okay, Mr. Devashish, if we talk about your margins now, so on a sequential basis, though there has been some improvement, but just a year back, your margins were near around 18%. So by when do you feel your margins can once again be in that 17 to 18% of range?
No, as we have said, we had to take a lot of one-time cost as far as the Q3 and Q4 are concerned, and especially Q3. And there was an integration effort going on, and it was a substantial effort, but the team did a phenomenal job in closing out everything. And as of 1st of April this year, we are working on one system, one process. So the synergies in terms of margin will start kicking in. And our expectation is that we will aim to get to the 17 to 18% EBIT this year, and definitely by end of this year. So we are very focused on margin, and we have always said that we believe in profitable growth, and that story should remain intact.
Right. Your BFSI segment forms a large part of the revenue. Do you expect to see some slowdown, or rather further slowdown in the fiscal year that we are in?
Well, it's we all watch the marketplace, but it's also a reflection of the portfolio of clients that you have within your BFS. So apart from the fact that we had a few situations where clients went for a freeze, which we are expecting that by end of Q1, it should all clear up. We are still optimistic on BFSI.
Okay, still optimistic on BFSI, but just to follow up there, Devashish, what about the other verticals? What is the outlook for retail and the other verticals?
Well, I mean, the growth that you see in FY23 has been broad-based. So it is not, and we are in certain verticals, and we will continue to remain on those verticals. There may be additional in terms of service line capabilities that we'll focus on, but our objective is to grow all the verticals broad-based across the globe.
Mr. Chatterjee, let's actually get an analysis of what's happening on ground. If you could tell us how's the deal momentum right now, and are you seeing any delay in decision making given the fact what's happening globally?
Well, from a deal activity standpoint, we are very confident about the closures that will happen in Q1 as well as we go along. There is tremendous amount of deal activity. That's number one. Number two is, the deals are more efficiency oriented rather than transformation oriented. That is a shift that has happened from last year to this year, and which is normal because clients have become very cautious and they want to preserve the cash. And but at the same time, the good news is that if you are talking about cost takeout deals, they tend to be longer term, which also gives a steady revenue in the longer term. The only flip side is some of these deals will take a little bit of time to ramp up, and of course the decision making has been a little slow, which is also not helping because the ramp up is kind of delayed. So apart from that, I don't think we are worried about the overall scenario as far as the portfolio of clients that we have.
Okay, with this, we'll let you go on that. Devashish, thank you so much for joining us today on ET Now. So that was the management of LTI Mindtree. Going ahead, they expect to claw back to 17-18% of margins by the year end. But for now, the BFSI segment is not holding that well. But let's move on. We still have the half of the show left to take all your stock-related queries. And believe us, we will be very quick at that. So let's start once again. And the next question that I have is coming from Sanjay. And Sneha, let me take it up from you. He wants to buy Max Healthcare at current levels. What's your outlook on this particular counter?
Okay. We like this company because basically the hospital chain has really done very well. It is concentrated in North India, but then it is expanding its portfolio well in advance. So it is a good investment bet from a long-term perspective. They are reducing their share of institutional patients, while the proportion of international patients flow would be increasing, and given the kind of cost cutting initiatives that they are undertaking. So overall, we are pretty confident of their good profitability over next few years. So one can definitely hold on to it.
Is for you coming in from Indu, and she wants to know whether the correction in Masgon Dock as well as Cochin Shipyard is done with, because she wants to make a fresh entry and she's asking if current level is a good level.
Yeah, it seems like the correction is over. The stocks have made a mild comeback from their previous lows. I think it's a good time where you should look to start chipping into both of these names. And if possible, I'm not sure whether you already have BEL or HL, but these are the other two names which you should also have as part of your core defense portfolio.
Okay, Sneha, coming to you for the next one. The question is from Dikshita, and she is holding Alsec Technologies currently at a loss of 10%. Do you track this one, and would you be able to advise her whether to average this particular counter at this point in time?
I'm extremely sorry, I have no view on this. But then, as a tech sector as a whole is undergoing a short-term blip, and at least for next few quarters, our outlook is pretty weak. I would suggest to actually wait for few quarters and then only take a clear-cut call with regards to the IT companies.
All right, this one is coming from Rahul. He's writing to us from all the way Toronto, Kunal, and he wants to know about, he is asking a positional view on PNB Housing as well as Astro Micro. Which one of them would be a good buy at current levels?
So the PNB Housing I do track quite closely. I think at 440 odd levels looks to be a very attractive chart. The recent recovery for the stock has also been quite strong. It's on the back of some extremely strong volume. So I would probably give more preference towards PNB Housing because I do track the stock quite closely. Astro Micro, on the other hand, maybe the stock at current levels may not be a great buy, but I think if the stock happens to dip back towards say 280 mark or 275, that could actually be a good starting point. The only reason is because the recent rally is getting into a bit of an overbought zone. So maybe a correction of 15-20 rupees from current levels could actually make the risk reward attractive if you're looking to buy.
Okay, Kunal, the next question once again for you. The question is from Mangesh from Pune, and he's holding good quantity of HDFC Bank is what he says, and he has been accumulating for the past 10 years. He wants to know the target for this particular counter post the merger over the next 1 year. Where do you see HDFC Bank?
So again, I think just purely based on the technical charts for HDFC Bank, I think the recent chart patterns indicate that the stock is forming a flag pattern on the daily time frame. This pattern is around 150 points in terms of the recent lows for the stock price from 1550 levels towards 1700 approximately where it's trading right now, which means potentially a breakout above 1700 mark could take the stock towards 1850 mark. That could be the first nominal target of this flag pattern for HDFC Bank. So I think if you're looking at it from a one year plus kind of a perspective, then that's the target which you can look to eye, 1850 levels.
All right, this one is coming from Rohit. He's writing to us from Oman, and he has a long-term investment idea, but he wants to know whether it makes sense to enter Mirza International and Atul Auto at current levels for the longer term. What's your take on this, Sneha? Do you think that now is the time that you can enter these counters and they make the cut to be in your long-term portfolio?
In the footwear segment, though I don't have the coverage on Mirza International, but we prefer actually Metro Brands and Campus in this space, given their strong foothold in the space. So these two are our recommendation in the footwear segment. And with regards to Atul Auto, definitely one can look at the company from a long-term perspective, given the kind of hold that they have in the three-wheeler market, and the kind of the steps the company is taking to capture the EV market. So definitely it's a good buy.
Okay, so that's the take on Atul Auto. But with this, viewers, it's time once again to slip into a short break. But don't go anywhere. We'll be right back.
Kicks.
Welcome back. You're watching Buy Now Sell Now right here on ET Now. Let me continue taking your queries as quick as possible. Last leg of the show. Leon, I am going to be taking your query, but before that, let me take Venkatesh's query. He's writing to us all the way from Indonesia, and he has sale Kunal 5,000 shares at a price of around 93 rupees per share. He wants to know whether he can average it. He is intending to hold it for the longer term.
Yeah, hold it for long term. I don't sense that there's a need to average the stock price as of now. I think it's better that you shift towards some other sector if possible. Maybe something from the banking names like IDFC First Bank could be actually better bets, or maybe from the real estate pack, something like DLF, which could be a classic bet even at current levels. I believe sale may take some bit of time to come back to that 90 plus mark back again. So I don't sense that it could be a good time to try and put in money, capital, or block your capital over here at this point of time.
Okay, moving on. Sneha, coming to you. Mohit is holding 500 shares of NMDC at a price of 136. He also got 500 shares of NMDC Steel against the merger. His time horizon is for the next 3 years. What will be your advice?
Okay, NMDC is a good bet. One can definitely hold on to it because given the kind of the capex expenditure that the government is taking, so the demand for this steel is likely to stay pretty strong. So NMDC one can definitely take a long term bet. But if the person has a very long horizon, say probably like 5 year plus kind of thing, then it's a cyclical stock, so one should definitely keep that in mind. But from at least 2 to 3 year perspective, one can hold on to it.
All right, this one is coming in from Leon, and see, Leon, as promised, I've taken your query. He's bought about 10 shares of DLF, for SIP. This is as per your recommendation, Kunal. But now the stock is booming, is what he's saying. So he's wondering whether he can hold the plan of SIP in DLF, 10 shares at a price of 410 rupees per share.
Yeah, I think if it's 10 shares every day, then definitely I think it's a very good strategy to do a SIP. I think it's a classic stock breakout confirmed on the daily as well as on the monthly time frame for DLF and looks extremely attractive. So I'm not sure that how soon and how quick the stock can move up higher, but maybe over the next 1 to 3 years kind of a time frame, I would expect some very steady as well as strong returns for DLF, something which I believe could probably be in line with what I discussed on ITC last year in the month of February, March, when the stock was at 220 odd levels. So I think a similar kind of a chart pattern is what I'm sensing on DLF.
Okay, Kunal, once again coming to you. The query is on HUL. Abhijit wants to know how are the short-term charts looking like for HUL. He's looking to invest 1 lakh of rupees. Time frame is 2 months.
So, I would say that maybe the worst could be behind the stock price because the entire FMCG sector is doing pretty well. HUL post results, went into a bit of a corrective phase. So, maybe the unknown is out of the box for HUL. I think at current levels, it could actually be a good play to try and look out for buying or adding to your stock price. So I'm not sure what's your actually starting price, but I think at current levels of 2,400, it could be a good starting point or an averaging point for you.
All right, this one is coming from TP Vinod from Salem, and Kunal, another one for you. Exide Industries May futures at 187 rupees per share. He wants to know whether he should hold or sell, and if you hold, then what's the near-term target, and if sell, then enter. When can he enter again?
I think you can look to sell at current levels. I think 195, 96 yesterday and today seems to be more of a supply zone because somewhere the stock is unable to sustain about those 195, 96 mark, which means it's a good time where you can look to start booking out profits. And then hopefully if the stock say comes back towards 188 to 190 mark, that could be a point where we look to buy back.
Okay, Kunal, once again, a question for you. Anant Krishnan wants a short-term outlook on two counters, Canara Bank and Bajaj Finance. He's looking for a fresh investment. So which one will be your bet?
Both of them are attractive. Canara Bank is going, all guns blazing at current levels of 310, 14. The entire PSU sector as well, PSU banking space specifically is doing exceedingly well. So there could be a chance that this momentum would continue for Canara Bank. Bajaj Finance, I think I think the numbers or so for the last couple of days has been a bit wobbly, but it's still sustaining about the 6,000, 6,200 mark. So you can start looking out for Bajaj Finance even at current levels. But Canara Bank, I believe, could probably perform well over the very short term.
Okay, this one is coming your way, Sneha. Girish Bani from Vadodara wants to know, does it make sense to hold Infosys for the longer term? Will it be beneficial? And if yes, then also what's the buy price? Yes, the tech sector is going through a rough patch, but for the longer term, if you take a really long-term view, say about 5 years, makes sense to buy Infosys?
from a long-term perspective, I mean, Infosys is definitely a buy. It's just as it's a near-term blip. Probably few quarters there would be pain, and the stock might further correct from here. Probably a range between 1,000 to 1,200 would be a good buying range. But from a long-term perspective, the opportunities are tremendous, and among the IT space, Infosys is one of our best bets.
Okay, moving on, and the next question is from Parth Anand. Sneha, he is holding 1,000 shares of LTI Mindtree at a price of 48 rupees. What's your outlook on this one?
We don't have coverage on the stock, but then the travel and tourism space is really doing well with the kind of boom that we are seeing in this space. The company has been continuously posting good results, so one can hold on to it from a medium term perspective, but do keep an eye on when the sector starts turning around. So probably that would be the time to actually get out of the stock. But at least for next few quarters, the things look really bright.
All right, and with that, actually, let's start with rapid fire. In fact, Shrishti just said this is what exactly we've been doing for the last half an hour, but nevertheless, let's take it more quickly then. And the first one coming your way, Kunal from Hemant, he's asking if it's good time to buy a fresh in MTAR Tech. What sort of target should he look at for the next 1 year?
A good time to buy. The stock is forming a bullish engulfing on the monthly charts. That's a very encouraging data point for MTAR Tech, which suggests to buy 2,200, 2,400 could be a target range.
Okay, Sneha, Dr. Shyam is holding 500 shares of Bank of India from a price of 98 rupees. What's your outlook on this one?
We are positive on Bank of India, but in the mid-cap PSU space, I would suggest Bank of Baroda. It's a much better bet.
Okay, Shrinu from Vijayawada wants to know about Tata Motors DVR. Kunal, 300 shares at a price of around 220 rupees per share. Can he look to book profits? If so, is it the right decision to book profits and look at Zomato instead?
Not really. I would suggest a hold on Tata Motors DVR. Yeah, you can look to add Zomato if you have extra capital.
Okay, Kunal, Ravi is holding 100 shares of Mishra Dhatu from a price of 250 rupees, sitting at a loss. Should he hold or average at this point?
Look to hold on at current levels. Again, it's forming a bullish engulfing on the monthly charts. Encouraging data point, you should look to hold on.
Okay, Sneha, this one is from Subramaniam from Chennai. 500 shares of Kaplan Point at the price of 688 rupees per share. What should he do with this one? How's the outlook looking for this company?
Sorry, no view on the company.
Okay, Kunal, Pradeep wants to invest in Axis Bank or Cyient. Any of these counters you like at this point?
Axis Bank could be a better bet because of the contra behavior of the stock price. I think at current levels of 850, good bet.
All right, this one is coming from Padma Siva Rao from Bangalore. Has Chola Finance entered the next level? Can he look to buy at current price, Kunal?
Well, yeah, I think the stock has been a class performer. Again, a flag pattern breakout on the monthly charts. A good buy at current levels.
Sneha, do you track Sterling and Wilson? Visakha is looking for a fresh investment out here. So, any advice?
Sorry, we don't track the company.
Okay, this one is coming from Shashank from Hyderabad. Kunal, LNT, it hit a 52-week high today. What can we expect in this series for this one?
2350 was the target which I had highlighted for LTI last week. Those targets have been reached. I think it's a good time to book out profits now.
Okay, but with this, viewers, we are completely out of time in this edition of Buy Now, Sell Now. Thank you so much, Kunal and Sneha, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's time to wrap this edition. It's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching.